All right, let me share with you a clip from this podcast, which just dropped 2 days ago. And this is not even a podcast specifically about cryptocurrency. This is the Investors Podcast. So it's about traditional finance, investments in general. The reason that they're doing this is because even though the audience is just traditional finance, traditional investors in general, they are interviewing the man behind Plan B in this episode, which you probably know from his Bitcoin stock to flow model. Stock being the amount of Bitcoin we have in existence today, and flow being the amount of Bitcoin that we can expect as it's mined into existence. And the hosts are interviewing Plan B, who is now a Bitcoin bull, but comes from traditional finance, who is still working at a multi-billion-dollar investment fund, meaning that his core competency is mortgages, quantitative investing, fixed income loans, and now he is a big Bitcoin bull. So listen to this, because with worldwide debt growing and a global recession looming, they had him on so that Plan B could offer his insights on this new phenomenon we're seeing from central banks, which are negative yielding bonds and negative interest rates, which is very unsustainable.
Interesting. So let's zoom out here. There's $17 trillion of negative yielding bonds in this world. I know you have some very interesting thoughts on how that plays into the Bitcoin thesis. Could you please elaborate?
The negative interest on $17 trillion worth of bonds is, together with the quantitative easing, the reason I am in Bitcoin. That was actually the reason I was actively looking for a high Sharpe ratio, non-correlated asset, a hedge, if you will, against the next crisis. And that's how I came on the path of Bitcoin. I find it amazing, the amount of negative interest rate bonds. It's uncharted waters for sure. We have never seen this before. I also think it's unsustainable, and it has unintended consequences. As a matter of fact, there's a very important report out there. It's an IMF report about deep negative interest rates. And it's not a research, it's a proposal. It's a readily implementable proposal. Deep negative interest rates means -5, -10%. That report is out there, ready to implement. I actually talked to the writers of that report. One of them is very active on Twitter. It's Miles Kimball. Very interesting to see what the intentions are, what the thinking of the central banks is behind those negative interest rates, and especially the deep negative interest rates, because we will go there. And in fact, the intention is really good. It's like a bank tech. They're saying, okay, the banks and all the big bad boys, they are getting negative interest rates, so they're earning nothing. But of course, for the public, the retail investor, they cannot go to zero. They'll be at zero, which is low, but still better than all the big investors. That's a way to make it better for the common man. That's the intention. It is a good intention.
Okay. So he's saying that the intention of these negative yielding bonds, these negative interest rates, the intention's good. They're intending to do some good, is what they say. Listen to this next part, because what these central banks are doing has consequences on a massive scale, because it's unsustainable. And just like they're about to say, these central banks are essentially creating their own Ponzi scheme-esque thing. Watch this.
That's one opinion. I think the unintended consequences, like gross misallocation of capital, is making it worse than better. Most people like me, or either an investor or a quant or something, are looking at the markets. They are starting to see the unsustainability of this, because we're talking about 25 to a third of all the bonds out there that are negative yielding at the moment. Of course, you can still buy them and make money. If the interest goes even deeper, you make a lot of money in fair value on those assets. That army of people hedging, not trusting this negative interest rate scenario and hedging their positions accordingly with Bitcoin, that army is going to grow slowly but steadily every day.
Back to the idea that you stated there, as far as, well, if people have an expectation that the rates are only going to go lower, then they could buy them and sell them at a profit. It is the definition of the greater fool's theory of investing, where you're entering into a contract that you fully know you're going to lose money on. If you hold it into maturity, you are guaranteed to lose money. It'd be like you and me saying, hey, let's shake. I'm going to give you $100, fully knowing that you're going to give me 95 back in the future when this matures. You're literally signing up to lose money. The only way I can make money in that deal is if I find a fool that's greater than myself. I'm issuing it there at a $5 loss. The only way is if somebody else comes along and is willing to take an even bigger loss. There's just no way that's sustainable. There's no way that's sustainable.
It's the very definition of a Ponzi in a way, right?
Yes. Yes. I mean, it is the definition of a Ponzi scheme.
Wow. That is the central banks right now. This podcast chock full of really great information. I'm going to link it down below in the description. The full thing, check it out. But the last clip I want to play you is, of course, about Plan B's stock to flow model, which again is used by economists for gold, for silver, but Bitcoin is a harder money. We know the flow. We know the halvings. And this is just a model, but for the last 10 years, it's been pretty accurate.
There's a lot of debate and narratives always around halvings. But if you look at the numbers, so we're now at a stock to flow of Bitcoin of 27, and that gives a value of, well, about a little under $10,000. So we're about there, a little bit over right now. But after the halving, if the stock to flow doubles, that's in May 2020. So that's 8 months away. Very interesting, very, very awesome event. The stock to flow doubles, but the value of Bitcoin goes 8 or 10x. Somewhere between, let me give a rough range, somewhere between 50 and 100K, starting somewhere after May next year. 4 years later, there's another halving. In 2024, the stock to flow will go to 100, something we as humans have never seen before. Spectacular moment in time. And the value that goes mathematically with an asset that has a stock to flow of 100 is somewhere between $400,000 and $1 million per Bitcoin.
All right. I guess the point is the financial world, the investment world is watching very carefully right now. And with quantitative easing, negative interest rates, and with the world debt looming higher, institutions are searching for a hedge. Like this video to get this information to as many people as you can, and subscribe to the channel for daily updates keeping you informed on the crypto market. That being said, like always, big news day. We're covering Ethereum, we're covering Dash, and we're even covering Bitcoin Cash. So let's jump in. Let's talk about some news. Ethereum is gaining pretty substantial adoption coming out of BitPay. BitPay is now going to let their merchants accept Ethereum. Payment solution BitPay will soon accept Ethereum, the second largest cryptocurrency by market capitalization, according to an announcement from the company today. With BitPay is a point-of-sale cryptocurrency merchant adoption service. Well, with BitPay, subscribing businesses will now be able to pay in Bitcoin, Bitcoin Cash, and Ethereum, along with a handful of stablecoins. And this is a long time coming because Ethereum, one of the first altcoins in existence, well, BitPay was launched near the beginning of cryptocurrency, launched in 2011, and settles with both fiat and crypto payments in over 200 countries. And now Ethereum is going to gain that adoption. Green flag if you hold Ethereum. Next piece of news, cryptocurrency Dash to begin trading on Coinbase Pro. This is big green flag for Dash. As you know, Dash is a privacy coin. And this comes, well, originally Coinbase announced like a month ago, earlier last month, that it was reviewing 8 cryptocurrencies to potentially put on their platform. Of those under study, Dash is now the first out of those 8 to be approved. I like it. This is a green flag for Dash holders, and it's interesting because this comes right as we're getting other news that exchanges like OKEX, Korea, they already did this. They have dropped 5 privacy coins, including Monero, including Dash, citing FATF rules, which is the Financial Action Task Force. So it's really up in the air right now for privacy coins, although this is very bullish. So let me know what you think down below in the comments. The news is pretty much in the headline. But last piece of news, HTC's blockchain phone now supports Bitcoin Cash. Interesting. Today, HTC announced its partnership with Bitcoin.com to add Bitcoin Cash support for its Exodus 1 blockchain phone. So I guess the phone will come with Bitcoin.com's pre-installed wallet and be rolled into the Exodus 1 software update. Bitcoin.com will also sell Exodus 1s and all future versions. So it kind of sounds like a win-win. But I mean, essentially, they are choosing to include Bitcoin Cash, I guess, because they think their customers will have a demand for Bitcoin Cash. Or possibly, maybe it's just an easy add since the code is similar. If you hold Bcash, then this is your day. Big day. All right, that is the video for today. My name's Austin. Don't forget to like the video if you want to, if you found value. But like always, I'll see you tomorrow.